Good afternoon, everyone. Thank you for joining us for the virtual program today, Nonprofit Finance for the Non-Financial Manager with Paulina Jordan. I am Brittany Spillman, and I serve as the Carey Center Director of Community and Collegiate Programs. Before we begin, I'd like to take a moment to thank this year's sponsors. This virtual program's presenting sponsor is the Walker Area Community Foundation. The Walker Area Community Foundation is a nonprofit grant-making organization building the permanent capital needed to daily facilitate community conversations, inspire action, and empower partners. This year's community and collegiate program sponsors have pledged to support our efforts in providing meaningful programming for the nonprofit sector. Thank you to Auburn University Outreach, the East Alabama Community Foundation, the River Region United Way, Auburn University Outreach Office of Public Service, Social U, the Drummond Thorne Stooks Fund for Excellence, and a community service grant made possible by State Senator Randy Price and State Representative Joe Lovern. Paulina Jordan is a Your Part-Time Controller Manager who works as part of the Your Part-Time Controller Anywhere team, working on a diverse set of nonprofit organizations nationwide. Paulina has 20 years of experience in public and private accounting. Prior to joining Your Part-Time Controller, she worked at Ernst & Young and KPMG, serving higher education, healthcare, and manufacturing clients. She also worked as a financial analyst and controller. Paulina thrives on building strong client relationships and enjoys problem solving and process improvement. She also loves beautiful, informative financial statements. Please join me in welcoming Paulina Jordan as she shares nonprofit finance.
Well, thank you, Brittany and the Carey Center for having us today. And in addition, in my presence, Tisa is also here with us. And Tisa, would you mind introducing yourself?
Thank you, Paulina. On behalf of your part-time controller, it is a privilege to have the opportunity to meet all of you, even if remotely, so that we can share our knowledge of nonprofit finance and accounting so that you have the information to make strategic decisions for your organization. We are appreciative of Brittany and the Carey Center for the invitation to participate in the advancement of philanthropy and nonprofit studies. I am in my 17th year at YPTC, beginning as a client service associate in the Philly market, moving to manager, and then in April of 2020 was asked to start up YPTC's remote services, where we began hiring from communities throughout the country and serve nonprofits nationally and globally. Next slide, please. Your part-time controller, or YPTC for short, has been serving nonprofit organizations for 32 years. Having begun in the Philadelphia area in 1993, we now have 12 and growing regional offices throughout the U.S. and remotely serve national and global organizations, as I mentioned before. With over 800 staff members and 2,000 clients, we have a broad foundation of knowledge and experience to provide to our clients. YPTC provides accounting and financial management and technical related services to nonprofits. Our mission is to provide nonprofits the financial information they need not just survive, but to thrive in their missions. We value the services nonprofits provide to their constituents. With the goal of helping our clients sleep at night, our services include day-to-day accounting, financial reporting, data visualization, and best practices, just to name a few. And now I turn it over to Paulina.
All right, let's get this party started. And for today's program, we are going to be presenting basic nonprofit financial statement terminology and concepts. We're going to take an introductory look into nonprofit financial statements and reporting requirements. And finally, we are going to review nonprofit governance and some financial best practices. So let's start with the basic nonprofit terminology. And I just wanted to mention that the chat is open and it's going to be monitored by Tisa and Brittany for questions. We'll try to answer them in real time or at the end. And you will also find our contact information in case you want to contact us individually. Okay, so let's start at the top. The accounting rules and regulations that we follow in the US are referred to as generally accepted accounting principles, or GAAP for short. Now, GAAP is issued by the FASB, or the Financial Accounting Standards Board, and GAAP is compiled into what is called the Accounting Standards Codifications, or the ASC. So you might hear nonprofit accountants or auditors talk about ASC 958, and this is the topic that is specific for nonprofits. So that is ASC 958, which contains the accounting rules for nonprofits. Okay, so let's define some basic accounting terms, and we'll start talking about the fiscal year. And this is a 12-month period that an organization uses to report its finances. Now, it doesn't have to be the calendar year, and it's often the fiscal year related to your operational cycle or your funding sources. And the best practice is to end your fiscal year at a time when your organization activity is at its lowest, so that will reduce the number and value of accruals. Your accounting records are maintained in the accounting system, also called the general ledger or the books. And this is usually done within software such as QuickBooks, Sage 50, and there are many others. Your general ledger is comprised of your chart of accounts and the transactions coded to those accounts, which will reflect your organization needs for tracking and reporting. Now, most accountants do follow a basic structure for the chart of accounts, and there are general guidelines that exist, but every organization's chart of accounts is going to be unique and should be tailored to what your organization needs. And finally, something that makes accountants and auditors very happy is to see sound systems, processes, and procedures. And we refer to those as internal controls. So, and those should be designed to protect your organization's assets and prevent errors. Now, there are several methods of recording your accounting activity into your accounting systems and also reporting your financial statements. And we'll refer to them as the basis of accounting. Now, as a nonprofit, you can choose either a cash basis of accounting or an accrual basis of accounting. Under the cash basis, your reports are only will show how much cash is received or disbursed during a period, but it isn't in accordance with GAAP. So that means if your financial statements are audited, they cannot, and they're presented in the cash basis, the auditors cannot issue a clean opinion. On the accrual basis side, your revenue is recorded when earned and your expenses when incurred, regardless of when your cash is received or paid. And this is in accordance with GAAP. So you might be asking, when or why might a nonprofit choose cash basis over accrual basis? Well, new or very small organizations often start out in the cash basis, but as they grow and they require a financial statement audit, they will switch to the accrual basis. However, even if you don't need an audit, sometimes there's banking covenants, contracts, or funding conditions that may require you to report on an accrual basis. So here's a quick side-by-side comparison highlighting why the accrual basis is preferred. So the accrual basis paints a more complete picture and allows better comparisons. And more importantly, the accrual method follows GAAP. Now, let's talk about your chart of accounts. So your chart of accounts is made up of the balance sheet accounts, which include your assets, your liabilities, and your equity, which is called net assets in the nonprofit world. And then your income statement accounts include revenues and expenses. Now, the reason a balance sheet balances is due to the accounting equations shown there on the bottom, which you might also hear it referred to as double entry accounting. So the difference between revenue and expenses each year is going to increase or decrease your equity, and that's how the balance sheet ultimately is always in balance. Now, on the income statement side of things, Your expenses should be reported not only based on their natural classification. So for example, you're going to do payroll, rent, telephone, etc. But nonprofits are also required to report expenses by function. And there are two major functions. So first, there's that program services function, and then the supporting activities. Under the supporting activities, that one is usually subdivided into two types: the admin, or also known as management in general, and development, which is also known as fundraising. And here's a tip: when you are setting up your chart of accounts to track your expenses by function, you can also track it by funder, department, and program. Now, some costs may relate more than just they more relate to more than just one function, and that's when costs are allocated. And that leads us to cost allocations. And this is the process where you take shared expenses or share cost and you spread those out to different activity centers, departments, or programs. Now, you will find cost allocations are very important in nonprofit accounting. And cost can either be direct or indirect. And when a cost is direct, it means that it benefits a specific function, program, or activity. Now, when it is indirect, it means that it just doesn't apply to one specific function, but it can be spread or allocated to different programs or functions. And all that is done based on a specific methodology that you pick for your organization. Which takes us to a very important thing. Your organization should have a cost allocation policy, which describes the methodology that you pick to do that cost allocation. And it is important because as part of an audit, you will be required to disclose your cost allocation methodology in a footnote. And there are different drivers that you can select to allocate out cost. And it could be like square footage or your salary cost. But the important thing is that the allocation methodology you choose must be rational and consistently applied. And it should be documented. The method may change over time as your operations change and grow. But again, the important thing is for you to have it documented, and it must be rational and consistently applied. Now, nonprofits differ from for-profits in some different ways, and this also causes accounting issues that are unique to nonprofits. So reason number one there mentioned is stewardship. So as opposed to for-profits, nonprofits are formed to deliver a mission rather than to provide goods or services at a profit. Nonprofits also have an absence of ownership, which means that no one has equity in a nonprofit. In fact, really should be called non-equity to better describe the nonprofit, because really a nonprofit must make money or make a profit in order to continue delivering their mission. It's just that no one owns the retained profits, which are referred to as net assets. So for example, if a nonprofit dissolves, the remaining net assets must be distributed to other nonprofits, or they must be turned over to the state in which the nonprofit was formed. And then number three is contributions. And this is where nonprofits are the most different from for-profit organizations. And it's one where there is very specific accounting guidance around. I won't get contributions accounting can take a whole day to explain. But I just wanted to really highlight that. So to help track those unique accounting issues, a good accounting system that fits your organization's needs should really be used. You might be wondering, what should I look for when selecting the right software? Well, you might want to consider not only the complexity of your organization and mission versus functionality in the software, but also the price. And we have a little tip or a little industry secret. Charitable organizations can actually purchase software at a significant discount from a company called TechSoup. But only 501c3 organizations are eligible. So I just want to repeat that again. Charitable organizations can actually purchase software at a discount from a company called TechSoup, but only 501c3 organizations are eligible. All right, so once you have your accounting system, you can customize it however you need, but keep in mind to try to keep it as simple as possible while still being specific to allow for major groupings. That means that you're not going to have a GL account for every vendor or for every donor. You can combine into one GL account, and then if those transactions become very material, you can always split them out. But it's better to keep things simple. And we want to design the chart of account structure based on the end product, which are your financial statements. So when picking an accounting system, you also want to think about how easy it's going to be to prepare those financial statements. Other things to keep in mind will be also linking to other software or information systems that can lead to efficiencies in your accounting. So for example, the accounting and most of the world is moving away from paper-based transactions to having everything documented electronically. Even the auditors now want electronic support rather than paper. Some of them are not even showing up at the offices anymore. So you want to make sure that your accounting system has that capability. Now, if you have a separate system for significant transactions, maybe, for example, you're selling tickets for performing arts, or you have student registrations or tuition platform, you want to make sure that those systems can communicate with your accounting system. And also you might want to take into consideration, are you going to lump all the transactions and summarize them, or have those be transfers in detail to the accounting system? Okay, in the interest of time, we are going to skip the poll questions, but we're going to leave them in there just so you can quiz yourself later or think about how these questions apply to your organization. Okay, so now let's move on to the nonprofit financial statements and reporting requirements. Now, these are the basic financial statements required for nonprofits. And as you can see, the names are different than what they're called on the for-profit world. So a balance sheet is called a statement of financial position in the nonprofit world. Your income statement or profit and loss is called a statement of activities. You will also have a statement of cash flows and an expense analysis. And in addition to these, we also recommend for monthly reports that are tailored to your organization and to the management needs. So for example, you might want to compare your actual versus budget. You might want to compare your actual versus prior month or prior quarter, prior year, or even compare your organization to another organization. But we're going to look at an example of a few reports. And of course, we're going to look at a fake company. So let's start with a statement of financial position, otherwise known as the balance sheet. It is going to show you a snapshot at a moment in time, and it's going to show you your assets, your liabilities, and your net assets. And as a reader of this information, it will show you a nonprofit's financial condition. So it'll summarize what the organization owns, what they owe, and the net results since the beginning of the organization's existence. And we present that information sequentially, top to bottom, in order of liquidity, and we classify them as current or non-current. So let's look very quickly at a sample report. So there's no set format. You can format it to your organization's needs. This one is in a column format. And again, this information is captured for a moment in time, usually a month end. In this case, it's June 30th of some year. Here are the total assets, your total liabilities, and your total net assets. Now, nonprofits must also segregate net assets into two categories or two different buckets. There is your without donor restriction and with donor restriction. And this approach emphasizes the fact that only donors can impose restrictions. So let me mention that again. Only the donor can impose restrictions. If your board is designating funds for future use, those funds are really without donor restriction. But you will want to track somewhere in your internal reporting the details of donor restricted revenue or item. This report also will show an organization's liquidity. So if you look on the asset side, they're listed according to their nearness of being converted to cash. And then the liability side is listed according to the nearness to maturity. And it's very helpful for your assets and liabilities to be broken down into current versus a non-current. Okay. Now, many times nonprofit staff unfortunately lack the expertise to compile financial reports for the needs of the management, but consider bringing in outside help to avoid the common errors shown here. I won't get into all of them, but I just want to focus on that last point about performing monthly bank reconciliations. So a bank reconciliation should not be performed in Excel. You want to perform your bank reconciliation within your accounting system. And performing these monthly timely bank reconciliations is the #1 way for you to catch any errors and detect fraud. So please do not skip this task. We recommend that executive directors, or a member of the board should be signing off on monthly bank reconciliations. This is a very important internal control that is often overlooked and will help you avoid long-term problems. So next we have the statement of activities, or the P&L, as it's called in QuickBooks. And this report covers a period in time. It'll show you your revenue and expenses, and the difference between those two is known as the change in net assets, or in the for-profit world, it will be called your net income. And as we mentioned, it should also cover donor restrictions and without donor restrictions. And this report is crucial for you to assess whether management is meeting their stewardship responsibilities. And let's take a quick look at a sample report. Again, there's no set format. You can customize it to your organization. This is in a column format, and this is for a period of time. And you could do it for a month, a quarter, or a fiscal year. Now, in this format, we have separate columns for activities without donor restrictions, shown here, and then with donor restrictions. And the release line signifies when donor restrictions have been met. Notice the impact is 0 because we are simply moving or reclassifying from one bucket to another. Now, the change in net assets must be present for both categories. And we like to think of the without donor restriction column as your operating activity for a current period. And then the with donor restriction column shows your net assets that are going to be available for future operating activities. Okay, and listed here are some common errors that can happen with a statement of activities. I just want to focus on one, which is in-kind contributions, because under GAAP, donations of goods and services, which are also known as in-kind, should be recognized in the financial statements, but they have to meet 2 criteria. 1, they have to create or enhance non-financial assets, or 2, they are provided by individuals with a specialized skill that would need to be purchased or donated. So for example, if a lawyer donates legal services, or an accountant donates financial services. However, contributed services from a board member or a trustee, while acting in the role of a board member or trustee, usually would not meet that criteria. So just keep in mind that non-cash contributions must be reported on a separate line item in the statement of activity. So if someone donates food, vehicles, fixed assets, supplies, or services, they should be recorded. Okay, and now we have the statement of cash flows, which is also for a period of time. Now, this report is designed to take you from the accrual basis and reconcile it to your cash activities. It is a very geeky report, and it is very hard for non-accountants to understand, so we are not going to go into much detail with it. But just keep in mind that it has 3 sections. There's your operating activities, which helps you see the increase or decrease in cash related to the production of income and related costs. And it can be presented in the indirect or direct method. Now, if you use QuickBooks, you will your report out of QuickBooks is in the indirect method, and that's the most widely used. And we'll see an example. But there's also an investing section, which is it will show your cash activity related to the purchasing or liquidating of fixed assets or investments. And then there's your financing activities, will show your cash activity regarding the borrowing or repaying of loans and donor restricted contributions. But let's take a very quick look at this geeky report, which is very hard to understand. So here is a side-by-side comparison of the indirect method versus the direct method. It's in a summarized form. And the indirect method is usually preferred because it reflects the conversion from accrual to the cash basis for operating activities. And there is that. And then there is the direct method, which is easier for the non-financial readers to understand because it's just showing you where the operating cash came from and who it went to. And then the remaining categories are the same, like we mentioned, the investing and the financing activities. And just to keep in mind that this is part of the audited financial statements, and that no matter which method you use, you will get to the same amount of cash for the year or for the period that you're looking at. Okay, and then here are some common errors to avoid relating the statement of cash flows. I am not going to go into all the details. And we will skip this poll question as well and talk a little bit more about the reporting of expenses. So like we mentioned, nonprofits are required to break out expenses into functional expenses. And like we mentioned, cost allocation is going to be needed. And you are probably going to have to allocate costs related to admin function. And that admin function should be reported as management and general activities because they represent a supporting activity of the organization. Now, if you do have staff who spend a portion of their time directly conducting or supervising program services, you can allocate their cost out to the different programs. And we'll take a quick look at a sample report. Now, if this report looks familiar to you, you might remember that this was a supplementary schedule that was required to complete Form 990, and the auditors would be able to prepare it for you. That is no longer the case. So auditors can no longer complete the schedule for your organization because they cannot audit their own work. So an important item of note here is that programmatic expenses are distinguished from support expenses. So this report gives readers a good idea of how the organization is expending their money on their programs versus the support function or general and administration. And we usually do provide that report to our clients. Just wanted to add that in. So in addition to the monthly reporting, you'll probably have to have audited financial statements because there might not only be required for many nonprofits due to state laws, bank covenants, or by funders, but they might also be good to get professional advice when you get these audits. And that advice might include help with tax reporting and compliance. You will get assistance and information about the latest accounting changes. You will also get assistance with internal controls, and the auditors can identify areas where management and the organization can improve processes and controls. Now, remember that there are independence rules, so there's only so much the non-audit services that an auditor can give you. But we feel that the most important reason to have an audit is that it is a best practice and it is key to the fiduciary responsibility of the nonprofit board. Now, the purpose of an audit is not for the auditor to review every single transaction, nor are the auditors responsible for detecting fraud. And if you don't want a full-blown audit, the audit firms can provide additional financial statement services, which are called reviews or compilations. So when you get a review, it's less rigorous than a full audit, but the procedures they perform will give enough comfort to say that your statements are materially correct. And in a compilation, they just pull information together in the form of financial statements, but no testing is performed. Now, you want to have a clean audit, and the auditors will always communicate if they find any significant deficiencies or material weaknesses. And both are very important products for the organization. And for an audit, preparation is key. So here are your goals that you should strive for with your organization. You want to complete your audit within 90 days of your fiscal year end. And you'll see why a little bit later. You want a clean opinion. You want 0 adjusting entries from the auditors. And you don't want any significant deficiencies or material weaknesses. And those might include, they might say that the design of your controls are not adequate. So for example, you might not have adequate segregation of duties, or that there's a failure in the operation of the internal controls. So for example, the reconciliations are not being performed, or there's a failure in the controls designed to safeguard assets. And now I'll turn it over to Tisa, who's going to discuss Form 990.
Thank you, Paulina. Before I start with the 990, I did want to follow up on two things that Paulina said. One was, and I do agree, the cash flow being a little geeky report, that what we have found in all the years working in non-for-profit, whether my 17 years at your part-time controller or even prior when I worked at Foundation and other not-for-profits, people in the for-profit world enjoy, and I'm going to use the word enjoy, the cash flow statement a little bit more than the nonprofit world. For us at YPTC, what we provide to our clients is a rolling forecast, a cash flow forecast, which provides that information on the cash flow, but also provides the ability for an organization to each month look at where they are in actual versus where they are in budgeted expectations. And the reconciliation of that accrual-based accounting on the statement of financial position, this statement of activities with the cash activities. So it is an option that we give to our clients to do that on a monthly basis. Now, as Paulina said in the audit, a cash flow statement, the geeky kind, is required, but on a monthly basis, we're able to provide that to our clients. And I just wanted to put that out there for those that are not really happy with the cash flow forecast. There is the cash flow, there is an option. The other thing that when Paulina mentioned the term stewardship, absence of ownership, and contributions, that ties into that IRS Form 990 and why it's so important. In order for nonprofits who are also tax-exempt entities to maintain their tax-exempt status, they must file a 990 on an annual basis. The Form 990 is an information return that provides the IRS and the public with information about a nonprofit's programs, performance, governance, and compensation paid. It is a public document. As Paulina mentioned, best practices is to have a 990, to have the audit within 90 days of fiscal year end, because the 990 is due the 15th day after the 5th month of the fiscal year. The audit process is most of the information needed for the 990 is accumulated during the audit process. So having that audit process done within the 90 days, as Paulina said, helps you be really prepared to meet the deadline for the 990. Penalties for not filing on a timely basis can range anywhere from $20 to $100 a day, or up to $10,000 to $51,000 a year. We do not want that. You can file an automatic extension for 6 months, but just remember those penalties. And worse yet, if an organization fails to file a 990 for 3 consecutive years, they automatically causes them to lose its tax exempt status. And none of us want that to happen. Next slide, please. Since the 990 is available to the public, it informs the public and the IRS. It is an easy way for donors, other funder sources, media, and charity watchdog organizations to evaluate the transparency, viability, and stewardship of an organization. And again, referring back to what Paulina said about stewardship. Viewing a nonprofit's 990 answers important questions such as revenue sources, sustainability, and how well the organization pays its employees. If filled out correctly and completely, the organization can present its mission and achievements in a favorable light. Next slide, please. Form 990, page 2, an example shown on the screen, is the Program Service Accomplishments section, where an organization describes its programs and its accomplishments. This is the place to quantify the descriptions to make sure it is clear to readers what your organization has been able to achieve. This is a free marketing tool that organizations should take advantage of. Although we don't have the sample here, I did want to bring this point up. On the 990, pages 3 through 6, it contains a checklist of required schedules, part 4, statements regarding other IRS filings and tax compliance, part 5, and government management and disclosures, part 6. It is vital that management and the board review these sections for accuracy, compliance, and best practices so that your organization's policies and procedures assure those best practices, internal controls, and oversight. Next slide, please. The audit firm used for the audit, review, or compilation of the fiscal year end financials most often prepares the Form 990. However, a separate preparer can also complete it. In any case, there should be a formal review process. Perhaps consider the treasurer, finance committee, or board member with relevant experience and expertise to serve as a detailed reviewer. As best practices, Form 990 should be provided to all board members prior to filing with the IRS. In fact, on Part 6, Section B, question number 11A and 11B, requires organizations to describe their process for reviewing the Form 990. Think about that before your next 990 cycle. And for our clients, in addition to helping to facilitate the audit with our clients, we also review the 990 to make sure that it best represents the activities and work with those treasurer finance committee members to make sure that everyone on board has a clear understanding of what is being presented. Next slide, please. And let me just get to this. Best practices. Note, tax-exempt status does not equate to exemption from all taxes. Sales and use tax. No exemption from the collection of tax on merchandise sold. Nonprofits can apply for exemption from payment of taxes on purchases. Property tax. Nonprofits can apply for exemption with local taxing authorities. Excise tax, unrelated business income tax, and excessive compensation. So our tip is consult with your tax accountant or nonprofit attorney before engaging in any new business activities. And now I turn it back to Paulina.
Thank you, Tisa. And we're going to skip that poll question. And we are at the finish line. We are going to touch base on the best practices for financial governance. So we're going to talk about your board and management overall. So here is a list and description of the key players in your organization, which are the board of directors, the executive director or CEO, and the controller or CFO and board treasurer. Now, the role of your board is to ensure that your organization performs all necessary activities in an ethical and legal manner. So included in their legal, fiduciary, and ethical obligations are also the obligations for financial governance. And even former board members can be held accountable if any improper acts were committed during their tenure. So to help mitigate those risks, you want the board members to establish financial policies and procedures, implement budgets and financial controls, review and understand your financial statements. And we have seen that a well-functioning nonprofit that has an engaged board and develops this vision and long-range plan, but allows management to run day-to-day operations are the most successful. And you can see the description of what each role should really be accomplishing. Now, it might not be effective or efficient for the entire board to be engaged in every single finance-related duty, which is where a finance committee or an audit committee steps in. So they address certain activities and then they go back to the board as a whole and update them on finance and audit activities. Now, if you are a small organization and have a small board, you might not have a separate audit committee or a separate finance committee, but if possible, it would be great to form an audit or finance committee just to ensure, for example, that annual audits are being performed timely and that the financial information is being reviewed and assessed regularly and in a timely basis. And here's another quick tip. It's best practice to conduct the process of selecting a different audit firm every 3 to 5 years. But if you do decide to keep your auditors, they should assign a new audit partner to oversee the engagement every 3 to 5 years, and that will keep a fresh overview of the organization. Now, governance and best practices are defined through policies, which is the why, and are implemented through procedures, which is the how. So you want your policies to be prescriptive in that they tell people what they should do, or they can be restrictive in that you're telling people what they cannot do. And the required policies of every organization include conflict of interest policies, whistleblower policies, and document destruction and retention policy. And it is very important to have those because there is a section in the Form 990 that Tisa mentioned where your organization has to say yes, that you have those kind of policies in place. Now, there are a lot of benefits to having your policies and procedures documented. That way, everyone across the organization and the board knows what is expected of them, And it also helps prevent the board from micromanaging. It streamlines decision making. And it could also serve as an orientation tool, not only for new staff members, but also for new board members or volunteers. Another tip, we recommend that all new board members should go through an orientation, so that way they learned about the organization and their role as what's expected of them as a board member. And then from a finance perspective, it would be great to have a finance calendar, which shows what your monthly, quarterly, and annual activities are. And that way, there is transparency throughout the organization of what is expected financially throughout the year. And the final thought on good governance is to maintain a governance checklist. Governance is so important that there's a separate section for it on the Form 990, like Tisa mentioned. And again, that good governance includes activities like establishing written policies and documented the process for determining executive compensation. So that was it. It was a lot of information thrown at you, but we hope that you got a good understanding of this basic financial statement terminology and concepts, basic reporting requirements and preparation of your financial statements, and the best practices for your nonprofit boards. And here are some other places where you can find some great tips and resources to ensure that your nonprofit has financial success. And I'll turn it over to Tisa to say goodbye.
Thank you, Paulina. We hope that this presentation provided each of you information that you can use at your organization. We did cover much in this overview, which demonstrates how integral accounting is for your organization's success and ability to serve your communities. Paulina and my contact information is included here, and please feel free. It also will be distributed with the presentation after today. Please feel free to contact us with any questions that you may have. And if you would like to find out how YPTC would be able to assist you or your organization, or if you'd just like to speak to us, we would love to hear from you. To each of you, have a wonderful day. And I'm looking, Brittany, we have a little bit of time. If anyone has any questions, we can do live questions. Otherwise, people can reach out to us via our contact information.
Yes, if anybody has any questions, please feel free to unmute or type it in the chat. These ladies are happy to help.
Brittany.
Go ahead.
My only question is, I know there's a in-person um, seminar coming up soon, I think in Tuskegee, and this topic is on that agenda. So will it be much different or
It'll
about the
be
same?
very, very similar because our speaker is Paulina Jordan.
That's
She
what I
is
thought.
in Alabama, and so we have recruited her to come in person to Tuskegee.
Okay, okay. But there's other things on the agenda for that as well, right?
Yes, ma'am.
Okay. Thank you.
And I just want to say, Linda, if there's any specific questions that you might have that we might be able even to address then, feel free to think about it, write it down, and we can discuss it then as well.
I will. Thank you so much.
You're welcome.
I have a quick question. I work for a much larger organization. Although we have 240 councils underneath the umbrella, I work for Scouting America. It's changed its name from Boy Scouts of America to Scouting America. And, we always fall into, I know this is the third council I've been into now out of the five, where our audits are not on time, and our auditors just feel like, they can just do it whenever because, I guess we're too small for, whatever they do. I guess I just attended a seminar right before the holiday, and one of the CPAs was like, "You tell them you want it now," and I thought, okay. But that put me in a bit of a quandary because I just moved here 6 months ago. and I have to now find a new auditor just because the prices have just gone up. So I will not probably, and I hope that I will, but I don't know if I'm going to make that deadline or if they're going to take it seriously enough to know that I want to make that deadline. So my question to you would be, what advice would you give outside of me just being very direct, as I have no problem being, of letting them know that, hey, here's my letter. I know it's January, but I need this done by May. What advice do you have?
Um, Paulina, do you want to take it or shall I?
Go ahead. I see she's itching to say something. Go ahead, Tisa.
Well, Tanya, first of all, what your experience is so common across the board. So, a
Okay.
few things. First of all, you did mention the fact that you have to find a new auditor. And as Paulina mentioned, even those of you who already have an auditor, the RFP process is really important to ask those auditors that you're going to be requesting information or proposal, things that are specific to you. What are your needs? What are your timeliness? And everything like that. And not as a sales pitch, but that is actually something that we can help either with our clients or even if someone is not our clients, just to give them the format or the structure and even help interview some of these accounting firms because um, whether they're local or whether they're regional accounting firms, each of them have different skills, different abilities.
Okay.
The person who gave you advice as asking for a time frame is absolutely right. You are the client to the auditor. But that being said, you mentioned that you have over 200 and some councils. It's important that you are prepared in advance. So that
Mhm.
means, one of the things that we always say for our clients is that we want them to be audit ready throughout the year. So when
Right.
it comes to the end of that fiscal year, there's things that need to get done, but not significant things that need to be
Right.
cleaned up. Because in that way, though you can jump quickly if those auditors said, well, you know what, you said May, but I have an opening here, and if you're prepared, you may be able to get that done sooner.
Okay.
So it does, take planning. That first year with the new auditor will take a little bit longer, will cost a little bit more, as most of you know, because they have a feel of what it's going to cost, but they're not exactly sure how prepared you will be.
Okay.
So the best thing you can do is demonstrate from the get-go that you have your records prepared. This is not going to take them all this time, and
Right.
that you can be an efficient audit. So that's my start. And now I'll turn it over to Paulina, since she as well has audit experience prior to coming to YPTC.
Yeah, I just wanted to add to that. Just keep in mind too, whatever besides your internal needs for an audit financial statement, are there banks waiting on the sideline, waiting to look at your financial statements? Are there donors? And again, the Form 990, you want to definitely file that one on time. If you see that the audit is, lagging a little behind, go ahead and tell whoever is going to file your Form 990, please go ahead and do an extension. So that way you're not doing that, at the last hour on the day of the deadline.
Right.
So that's another recommendation. That way you have time to let the auditors finish, but also give you time to review, and have a good review. Because we've seen it where, everybody's rushing, and then at the end it's like, okay, well,
Mm.
something was wrong. Now we have to submit a revised Form 990.
Right.
And you are like T said, you are the client, and if you're not happy, keep looking for an auditor that's going to meet those needs.
Gotcha. Thank you.
You're welcome.
Any other questions? Well, Paulina and Tisa, thank you so much for a wonderful program today. Everyone, you'll be getting an email from me with a link to today's presentation and recording, a short 3-question survey, and an opportunity to sign up to be a Carey Center nonprofit affiliate. The Carey Center Nonprofit Affiliate Program currently serves over 390 nonprofits in Alabama and beyond and offers educational programming, professional development, and networking opportunities to nonprofit professionals. Carey Center nonprofit affiliates are the first to learn about upcoming programming, and membership is free. We are excited to announce that we are offering the Carey Center Nonprofit Professional Certificate. This is an online non-degreed certificate offered through a partnership with the Auburn University Office of Professional and Continuing Education and Merit Nonprofit Professional Development. and provides a tailored curriculum for nonprofit professionals. Merit is an anytime, anywhere micro-learning platform that builds 6 core nonprofit proficiency areas, including leading, learning, resource generating, planning, managing, and overseeing through 28 different learning paths. Thank you again for joining us today, and we hope to see you at one of our monthly virtual programs or in person for our nonprofit training series currently traveling the state. Thank y'all.
Thank you.
Thank you.